Senator Heitkamp.
Thank you, Mr. Chairman. One of the concerns that I have, obviously, is economies of scale. If you're a large financial institution, you can have a fairly robust plan to protect our financial system from nefarious financial transactions. But if you're a small bank, if you're a regional or a small bank, it just gets tougher and tougher. And these regulations are among their top concerns. And so I guess I want to maybe get some advice from all of you on how we can better resource our regional banks and our community banks and our credit unions to accomplish the purposes that we know are essential. And so we'll start with you, Mr. Lormel.
Well, that's certainly a challenge. One of the things that I'm a big advocate for are working groups and information sharing and partnerships. So to the extent we can, improve the information sharing, especially down at that level. So what you have, Senator, are going to be kind of working groups. There are national working groups, and certainly the smaller banks are less inclined to be involved in those. So it's at the grassroots level. It's at whatever jurisdiction they're in and in their cities and things, is to work with, to get involved with the working groups for law enforcement, because you have to leverage, as you pointed out, they have limited resources. So how do you leverage those resources? And for me, that's partnering and getting into a better sense of sharing information to the extent that you can. But I'm also a big proponent, and I've written about this in a couple of articles, kind of like a SWOT approach in a sense. Even in a small institution where you have limited resources, it's being taken the extra step. And if you make the analogy of a law enforcement SWAT team, for instance, they have primary responsibilities, and SWAT is their secondary or collateral responsibility. So when you go back into the institution here, you take one person or a team of people to the extent that you can build it, and have them specially trained. And I think, and one of the things that I'm really impressed with bankers is the commitment. And you know, you talk to Tracy and their staff, is how dedicated they are to what they're doing. So it's to be really familiar with a lot of these issues, and issues particularly that would hit their bank, and to be able to, again, leverage your resources and capabilities in responding and prioritizing to things.
Yeah, I think that wouldn't exactly give them any comfort. Ms. Woodrow?
Thank you for asking that question. As a representative of a regional bank, I certainly feel that pressure. And there's so much of a difference between the very large money center banks and the community banks, credit unions. We're all subject to the same law. We all have to follow the same regulations. But the ability, the sophistication, and the resources are very different. I think that's one of the reasons why I feel it's important that we allow banks of all sizes to experiment and to collaborate with each other. So, for example, small banks, community banks, and regional banks could get together and collaborate on activities, collaborate on resources and technology, rather than going it alone. And to do this, it is important to make sure that we have that flexibility, both from a regulatory perspective and an examiner perspective, that they're willing to allow us to do that, and from an information sharing perspective, so that we could pool our resources and I think be much more effective.
Mr. Ponce?
Thank you, Senator. It's a great question, and one that we debated a lot when I was in government and continue to see in the private sector. The first answer, which you probably heard and deserves some more color, is this is the risk-based approach. So if you're a small thrift or community bank, you do not have the same risks as a dollar clearing money center bank. But you still have the responsibility to understand the risks associated with your customers, which if they're local, you're going to know them better. The products and services that you offer, which again may be fairly straightforward banking products and less esoteric financial instruments, and the markets in which you are transacting. You probably don't have correspondent relationships with Kyrgyzstan. So that should inform a targeted approach to risk management that is very different for a local community bank than it is for a global bank. That philosophical understanding breaks down often in practice because it's challenging. And so the first point I would make is that in implementing a risk-based approach, there has to be more training about what a risk-based approach means, what the determinants of risk are across customers, products, services, and markets, and how those risks are evident in certain local communities in ways that are vastly different than other places. That's the first point. The second is that with respect to managing those risks, there should be greater attention and prioritization over what we call utilities or consortium. So take training as an example. Why isn't training provided in a regional platform or a community bank platform in a more accelerated fashion? This is an area where community banks can pool their resources to get an education on this, and again, something that we're working on. Another way to think about utilities is operational. Dennis mentioned, and I fully agree, we've talked for years around taking the Bank Secrecy Act Advisory Group, which sits at Treasury as basically a central policymaking group exempt from FACA, and localizing those around prosecutor offices and saying, why don't we have local SAR review teams meeting on a regular basis with the filers in that community that help those community banks understand this is what your local investigators are seeing, this is what your prosecutors are interested in. It creates much more of a public-private sector partnership. So the utilities are a second idea. And the last one just looks at shared risk management as a principle. This gets to Senator Donnelly's point about real estate. It's very difficult for community banks to absorb all the responsibility of risk management when a lot of those risks are coming through financial service sectors that distance the bank from the underlying risk. Almost every bank I can think of has escrow accounts, to Tracy's point, whether it's for real estate or for law firms or for other purposes. And we see money laundering through those accounts. There's a case in my testimony that is literally incredible, about over $300 billion that were laundered through a top law firm in the United States, an escrow account, to buy real estate on behalf of the alleged, under DOJ's civil complaint, the former Prime Minister of Malaysia. That's an astounding case. It's an astounding case. How does that happen in a top bank and a top law firm? Because we don't have controls on those sorts of intermediary accounts. Community banks don't have that exposure, but they have those types of accounts that can introduce it. So that's a shared risk management responsibility that requires banks to, requires authorities to give banks some relief by sharing that risk management responsibility with others that introduce that risk.
I think, just speaking from a position as a former law enforcement officer, I think you'd have a hard time convincing law enforcement officers to and prosecutors to share intel more broadly to non-law enforcement folks, and that creates a real challenge because you want to avoid the subpoena that's going to tell you did something wrong, but law enforcement isn't going to want to broadly broadcast what they're currently looking at and where they go. If I can just get a few more minutes, I want to talk about artificial intelligence. There's been a lot of talk about whether artificial intelligence is going to be the great equalizer. It was interesting, during a banking hearing recently, I made the claim that perhaps on compliance burdens, it will again skew to the larger banks. And actually, a regional bank officer who was testifying said no, she thought that it might actually bring costs down and allow you to balance, depending upon what products out there that's going to provide that kind of compliance check. So if we looked at, this is a function we're asking banks to take on for the betterment and the security of our country. It's not something that, that is part of their business model, but it is a critical component of making sure that we're safe and secure. And so when we look at artificial intelligence, does it make sense to look at products which can be deployed and look at shared costs for that kind of technology that will lower costs for smaller financial institutions, but achieve a better result consequently? Mr. Ponzi?
Senator, you're hitting on, I think, one of the most exciting ideas in AML in a long time, and I agree with everything you said. I would just point to the relationship between the potential of these new technologies to include artificial intelligence and the need for data. The data that you need to drive AI systems so that you have real fidelity on the results and understand that this is a bad apple and this one looks like a bad apple, but it's actually legitimate. Requires pooling of information at the moment is constrained by information sharing restrictions or ambiguities. There's a section in my testimony, and I know we've talked about it in other places, about the need to clarify and strengthen information sharing allowances, if not requirements, so that financial institutions can do exactly what you're saying, that they can take their transactional information, their customer information, their counterparty information, throw it onto a platform with the right kinds of controls around it, where these types of artificial intelligence systems can exploit that data to learn what good looks like and what bad looks like. Once those models are established, those can be migrated to other platforms. We don't know enough, frankly, at least in my view, to know what is the best way to do this, but clearly the next step is to encourage pilots around these sorts of enterprises, and that can be done with stronger information sharing allowances or requirements and incentives to banks and others to play. I'll just, two more points because they're related. One is, if you think about this from a bank perspective, if you're the general counsel of a bank and you hear this conversation, you can think, this is really exciting, we should do it, but what happens if I put my information into that platform because I want to do the right thing? And then there's an investigation stemming from my voluntary, right, or at least my proactive approach to compliance and risk management that all of a sudden exposes my bank to an enforcement action. I can't do that as a general counsel in good faith, as a fiduciary to my institution, create that exposure. So what kind of downside protection are you going to give me? We can't give safe harbor. We've all been there before. But we can be creative in thinking about protections that incentivize institutions by giving them downside risk management. On the upside, if I'm going to be putting my information into this platform and dedicating analysts to that, do I get any credit for that? Because that's not necessarily in my exam manual, it's not necessarily part of my exam process, and these are resources that have an opportunity cost. So if I'm playing in that space, what sort of credit do I get for that? I know that sounds petty, but it's not, because if you're sitting there running these programs, you have to make these choices, and this is where congressional direction can really help.
Yeah, I don't think it's petty. I think that we're asking banks and financial institutions to perform a function that does not add any value to them, but adds value to the country and the security of the financial system as a whole, but also the security of our country against human traffickers, against money launderers, you know, the whole nine yards. So a tough topic, but I'm really concerned about what's going to happen to our small community banks as we put more and more regulatory burden on them, more regulatory burden and a high risk regulatory burden. So thank you, Mr. Chairman.